If you watch the stock market at all, it should be no surprise that Nividia has been on an incredible run of late. Hello, my name's Darryl. In this video, I'm going to provide some insight into my Nividia trades and how I manage risk using Chandelier Exits. I will show how I track investment returns for the trading activity. Credits for the general approach for managing stop losses is from Grayson Roze, the Director of Operations at StockCharts.com. And the spreadsheet that I'll use for tracking trades is courtesy of Kevin Burgess, a YouTube creator and founder of Wealth Circuit Investing. I want to thank them both for their insights. Nvidia has been on a meteoric rise with the introduction of artificial intelligence. As you can see here, the 1 year stock returns about 186%. If we look at it year to date, 132%. It's just been on an incredible run. On Seeking Alpha, we can see the forward PE is currently sitting at 42. If we look at the total returns over the last year, we can see that Nvidia has returned 184% compared to the 26% increase in the S&P 500. In the year to date, we're sitting at 130% compared to 11% on the S&P 500. If we look at the last 6 months, it's been 138% for Nvidia compared to 16.5% for the S&P. And even in the last month, Nvidia has returned 31.5% compared to the S&P's 3.2%. This is basically following the last earnings release where Nvidia announced a 10-for-1 stock split that becomes effective on trading for the 10th of June. And while there's no change in company value, it does have a psychological effect on investor behavior and invites more investors into the action despite the ability to buy fractional shares at many brokerages. If we look at fast graphs, we can see that it is trading above its normal PE ratio and trading above the fair value ratio is calculated by fast graphs. So it is trading at a premium at the moment. The normal PE is basically 40 times and the fair value is 30 and the blended is 65.7. As a retired investor, Nvidia wouldn't typically be on my radar screen for an investment, but given all of the media attention and some of the investment groups that I'm involved in, I really became interested in what Nvidia price action was doing. And I noticed at the middle of 2023 through about January, basically, it traded in a consolidation pattern. It basically stayed in range of about 505 to 392. And I took a position sometime in November, a small position, just to make sure that it was kept on my radar and something I can watch. But when it finally broke out of this consolidation pattern is really when I became interested and started adding shares. So in the tracking spreadsheet that I use, I bought that first share or first couple of shares in November. And then in January, I bought several shares. And the ones that are highlighted in green, I bought those shares and then actually sold them at some point. And then beginning back in May, earlier this month, I started adding additional shares. So the sales that I had fell into this range where the price started decreasing and I became a little cautious. And also in April, when there was a pullback in the overall market, I became a little bit cautious and sold those shares, but have since been picking them back up. My most recent purchase was just today, May 29th. Before the earnings announcement, I had a cost basis of about $651, and it was trading closer to in the 900s. So I had a pretty good buffer there. I felt comfortable with the risk that I was taking going into earnings. So this spreadsheet is based on an example that was provided by Kevin Burgess that I gave credit to at the beginning of the video. I have modified it a little to separate my current positions from the total positions and to provide return information on the total investment versus my net position investment. So I basically added this column here and I highlight the rows where I've sold some shares rather. So those don't get updated any longer. But any current positions that I have are color coded in white, and those are still active. The sell date would be always today's date if I haven't sold it. If I have sold it, it has the actual date that I sold it. So I can look at what I could sell it for today, what the gain or loss would be versus where I bought it, the percentage of return, the number of days that position has been held, along with the weighted days that that position has been held. Then we can get some totals down here at the bottom. So the total investment return and the percentage along with the number of weighted days. If I've been paid any dividends, those get added in here. If I did any option trading, I put the profit or loss in here. So then we get our total return based on the investment. Then we calculate the total return for all of the shares that I've purchased. So I've invested a total of $12,500 and have sold about 5,000 of those. So I'm currently sitting at about 7,000. The total return has been 44.9 for the total position, 79 for my current position, and the annualized rate of return is 227 for the total investment, 401% for my current investment. You may notice that these numbers are actually updating in near real time as the trading day progresses. Basically, I'm using the stock data add-in and grabbing the current actual price. That gets entered in here, multiplied by the total number of shares for the total investment. So it updates throughout the day, and I can watch these totals if I'm so inclined. So the next part we'll get to is about how I actually manage these trades. I want to move over to a chart that I review on a daily basis, and I'm going to be adding the information that I use so you can see how I actually track these. The cost basis of my current position is $722.76. So I actually add a green line, a green horizontal line on the stock chart with that value in it. And when I update it, it'll show that green line so I can see where I am in comparison to my cost my cost basis. Then I also add my net cost basis, which is $707.17. So I enter that as a horizontal line with a lime color. So we can enter that. When I update the chart, my net cost basis, which includes any dividends, any option trade profit and loss, and any profit and loss from any sold position. So that'll either decrease or increase my net cost basis. Then I use chandelier exits, and this is probably for me the most important part. As a trader, sometimes we can get very nervous when the price is increasing like it has over the last 5 days, and we may be inclined to sell maybe a little bit too early. I can't tell what's going to happen tomorrow. I don't know whether it's going to run to 1300 or drop down to 800. There's just no way for me to know that tomorrow. But this will keep me from jumping out of trades too early. So I do have some moving averages here, a 5-day moving average, a 20-day moving average, 50-day moving average, and a 200-day. So I keep an eye on those as well. Since the earnings release, where it was trading right on the 5-day moving average, it's jumped up quite above that and now trading quite a bit higher than that 5-day moving average. But I'm going to add some chandelier exits. What I did previously is I would, to create my stop losses, I would just take the previous highest stock price. I would take that value and multiply it for a 5% loss, an 8% loss, or a 12% loss. And if it hit that 5% loss, I would sell maybe 25% of my position. If it hit the first loss at 8%, then I would sell 50%. And if it loses any more than that, then I'm going to get out of the trade completely. So that's where I had those lines previously. Let me show you how I set them up now. I basically create 3 lines with chandelier exits. And basically what a chandelier exit is basically the average true range for the last 14 days. And then that's the average. And then this chandelier exit by default would be 3 times that average true range would show you the exit. So I set them to be 3, 5, and 7. That basically aligns with my 5% stop, my 8% stop, and my 12% stop. And then I turn my 5, or the 3 times the average true range, I set that to orange, and I set the 5 and 7 to red. Then we can look at the chart. We can see that these chandelier exits have been set here. And there's the orange chandelier and the 2 reds. And basically at the 3 times the average true range, the price would be 1037. At 5 times the average true range would be 959.67. And at 7 times the average true range, where I would sell out of the entire position, would be 881. So we can go down here, and in these, I'm going to set some horizontal lines, an orange and a couple of reds. So I'm going to set that to 1037, 0.77. I'll set my two reds to be 959.67 and 881.57. And those may have changed because the price is updating in real time, but this will give you a basic idea. I also like to set the opacity to only be about 0.3, and that keeps the exit lines from being quite so intrusive on my chart. So if we look at that, you can see that they're quite a bit dimmer at this point. So here's my orange line where I would sell out maybe 25% of the position. If it gets down below that, I would sell out 50% of my position if it hits this red one, and would probably sell out of the entire position if it drops down below this third chandelier exit. And then each day, the chandelier exit values are going to change, either go up or down based on the price of the stock. And if it does that, then I will make adjustments each morning when I review my charts with the new chandelier information if it is still increasing. If we look at the relative strength indicator for Nividia, it is into an oversold position, but as you can see here, it can stay in that condition for quite a long time. This was from the early January to about the third week of February. It stayed in an oversold position. Then the MACD is definitely in a buy condition at this point and strengthening. Accumulation and decumulation is also increasing. Nividia is handily beating the SPY ETF, and Nividia is also outperforming on a relative basis its industry, which is the semiconductor industry. So given this condition, it looks like everything's still a go for Nividia until it's not. But this is how I manage my trades, make sure I don't get caught in a position where the stock price creeps down on me and I end up losing these gains. Well, I hope you've enjoyed this video, and I hope it was helpful. I appreciate people like Grayson Roze and Kevin Burgess, who have provided some learning for me that has helped me understand these concepts a little bit better and put them to good use. If you've enjoyed the video, please press the like button. Consider subscribing to the channel. And if you have any comments or questions or critiques, maybe some improvements I can make, please leave a comment below. Thank you very much.